Hi, how's everybody doing? This is Mr. and Mrs. Silver Fox Forex back with another training tip video. And I want to show you guys, if I can real quick here. So many people are talking about, oh, you need this indicator to use to trade. You need this signal to trade. Excuse me. And that's just simply not the case. Now, do they help you trade? Yes, they give you warnings to let you know, hey, this is getting ready to shift and go in an opposite direction. However, my opinion of why a lot of traders fail, it's because they don't put in the time. They're not in front of the computer at the time they say they're going to be there to give it that time so that the move can happen. I'm going to give you guys a prime example. Sorry about that. That's my work phone going off. Things going on at work. Um, they don't put in the time. Now we're going from the Asian session here over into the London Open because this is the Asian close. Okay. If you say you're going to trade from 2 to 6, then that's what you have to do. That's 4 hours. If you watch your charts right, now here's the thing, and I try to explain this to everybody. You never see any of this happening. Why? Hold on one second. Let me silence this real quick. That's what happens when you're a manager. 1 second, guys. See if I can't. This thing will vibrate here. Okay, my do not disturb is on. Let's see if that works. Um, it's only 4 hours, and I feel like a lot of traders miss that opportunity because um, they don't give it that time. They don't. They don't give it the time to sit there and wait for something to happen. If you're going to trade the New York Open, you know, from here to here, because it's 12:30 where some of you guys are at, so it's lunchtime. It didn't slow down, so the movement's going to be very slow. But if you're going to trade from here to here, put the time in. From 8 to 11, put that time in. If you're going to trade pre-market from 6 to 8 or whatever, put that time in. If you're going to do London Open, put the time in. Give it the 4 hours, and I guarantee you can see the setups happening. This is the Asian session. If you're going to trade it, you got to give it that time. And look what happened. 41 pips. It's not so much that the indicators are not working. You're just not working on being at the computer at the right time or putting in the time. You're just not. Perfect downtrend, multiple entries, and out. Write it down, and you're out. Pull back. You might catch this a little bit. Get out. Comes across. Back in. Pull back. Now here are where things getting ready to change. As it's doing a pullback, it keeps testing that 20 moving average. Comes down a little bit, but it doesn't go too far. It closes on that 20 moving average. And it closes above, so this is still a pullback. Now we're at the 50 moving average. It closes on or above. Now we're in a reversal. And it reverses up, comes back, tests that area of the 20, never breaks it, and goes back up and goes back up. This is what you would have waited for. This is right here is 6 o'clock in the morning. This is pre-market. So when the things are not looking good and your indicator is saying, yeah, it's going to be a sale, but this is lagging information now, guys, okay? This is lagging. This right here that you see at the bottom will coincide with this move right here. Remember now, I'm on the 5-minute chart. This is 5 minute here. This is 30 minutes and this is an hour. It's lagging. This that you see, this back portion from here to here, coincides with this whole move right here. Now we're focusing on this area up here. As you see that the bars are still red because this move like back here was consistent with that. When you start seeing the blue here because it's lagging, blue here because it's lagging, but this is what you're focusing on right here is this move right here is the AO turns blue and we get to move above the waterline. This right here is what you see. This is happening right here. And as I always tell you guys, when that candle closes on or above, that's when you're getting that trade. So from here you could have got in, rolled it up. If you were not comfortable staying in, cool, get out. You've made some pips. You would have made, let's see here, candle close on above, 11 pips if you were not cool with that. If not, you still get in down here. If you know you can go further, then you hold it because it did that full reversal. That was 36 pips. Put in the time. You have to look when these things are crossing over and changing, when they're breaking these levels of support and resistance, and when they're crossing over these 20 and 50 moving averages. As I said, all this red coincide with this move right here. You see the blue on the lagging indicator? That's this move to the upside right here because now we're above the waterline. I can't stress to put in the time. I can't stress to put in the time. If you put in the time, everything will be okay. Let everything, just know that everything is going to play out. Put that time in. No matter where I go on this chart and I show you, you're going to trade that session and you put in that time, you're going to catch the breakout coming down here and make pips, or you're going to catch it over here going up. Put in a time. It was a little choppy. It really didn't move a whole lot for the London, but depending on where you got in at, you might have got stopped out a couple of times because you had some long wicks, but I wouldn't have never got in anyway because look at this. That's that noise. I tell you guys about the noise. Be careful of the noise. Look at all these long wicks. They would have taken you out, but if you would have sat there long enough, you would have waited. Where this candle closed and where this candle opened is where you would have got in at. 20 pips, and you're done. If you're trading in London, you're done. That was it right there. That's all that I see. I wouldn't risk trying to do anything else. Maybe over here. Maybe. If the indication was good enough, maybe. But this is more clear to me. You come over here to the New York Open, letting you know we're selling all the way down. Lagging, but down, lagging, we're going down, but we're below the waterline. Regardless if these bars are blue or red, they're small, but they're going down. We're below the 20 and the 50 moving average. So this right here is 6 a.m. When the candle gets closest to the first moving average is when you get in. Bam, you're in. Your stop is 20. Never went that far. If you want to come down to here, let's say you got out right here. 48 pips. You will wait for the pullback. Back in. It's up to you. If you put in the time, you can catch it. So this is all downhill from London to New York session. It wasn't until the New York session was getting ready to slow down and go to lunch that it reversed. This is crazy. Now, if you were good enough, you could have made some pips on this, but this right here is crazy. This right here is crazy. Can you trade it? Yes, you can wait till this candle closes right here on or above. That's what the wick did and got in. But this is crazy. I'm telling you guys. Again, noise. All this is noise because you're not putting in the time to sit in front of the computer at the right time to trade. This was a news candle, I remember. When news comes out, sometimes you have to wait for things to settle before you can see a clearer picture to get in to take some trades. This is a nice run right here, pull back, nice run, and you're done. For me, the London, okay, nothing was really popping. There was a lot of sideways chatter, maybe a few spikes and things like that. The clearest move that I'll possibly see would be, and this is not super clear because these lines didn't cross yet. So when the 20 goes below the 50 and the 50 is on top, this is actually a clear indication, a more safer indication. You wouldn't catch that, but when that candle closed and that one opened, it did a little pullback on you. But down here, 10 pips. Every pip counts. But put in the time. Noise. Noise. But if you set for long enough, you would have caught this move, pulled back, caught this move. A little choppy, but good. So let's say you put the time in. 2 a.m., had a nice run, came back down, got a little spotty. It dropped below the 50 and the 20 and came back up. So you have to be careful for those things, but wait for those clear indications that the weather's just right for you to go outside. This is good weather right here to get in. Look at this Asian session again. Caught the run down, reversed, went up. You have to sit here and wait for those nice opportunities. They're not just going to come in 5 and 10 and 30 minutes. Put those 4 hours in. This is 2. This is like 1 a.m., 12:30. Pre-market. Nice move. Got the little fluctuating where it never broke the resistance level. Came back down a little bit, went back up. Now it's starting to break through. Things are starting to change, but still not a perfect indication. You could have made some pips there, but not a whole lot. Everything's really didn't start looking clear until you get into the 7 a.m. area and it moved up. You would have been done and out. 28 pips. The thing is, these are the lagging indicators, okay? They're not going to show you every second right on time that this is getting ready to make a change. And if it does, sometimes that can be confusing and mess a lot of people up. Put that time in. You trade the whole session, put that time in. Okay, you might have made a little something, you're waiting because this is your session. You're going to trade it till it ends. And look what happened when it ends, ladies and gentlemen. Lines crossed over, dropped below. Bam, 27 pips. So in my opinion, put the time in. If you put the time in, things will be good for you and your trades will be better. Take care and happy trading.